morning, ladies and gentlemen. Welcome to Market Today. My name is Shail Bhatnagar. I'm joining you from New Delhi. This is a fine Tuesday morning to look at how markets will function on May the 7th. Let's look at the basic data that's right there in front of us. We'll go it slowly and calmly. There is a lot to discuss and a lot to benefit from. We'll start as usual with the Nifty chart with you. There are many events lined up for today, and among them the third phase of national elections across the country. Today about 83 seats will be decided upon, and by the time 6 p.m. strikes in, nearly half of Lok Sabha seats, 272, 273 to be precise, will be voted upon. But let's get back to the markets. This is the chart of Nifty right there in front of you. Two things happened on Monday. Extreme disappointment. It was supposed to be a fantastic start. About 100-150 point gap up. The Nifty was supposed to move up from those levels, but no such thing happened, and the Nifty ended 33 points lower at 22,442. The only good thing that came out of yesterday's trade was that the 21-day exponential moving average held forth, and you saw strong money moving into beaten down sectors such as IT and of course FMCG. Now let's look at the most worrisome chart. The PCR will fire you the chart of India VIX. This is the fear index. Essentially we had forgotten about the VIX chart for about a year or so, because volatility had dipped absolutely over the last 12 months. But look at this chart. Now this is India VIX at about 16.63. Look at the last 8 days. It's risen day on day, consecutive rise, and at the moment this is the highest since March of 2023. So we are looking at a 12-13 month high as far as India VIX is concerned, given the fact that national elections are ongoing. Volatility has spiked. If you look at the trading patterns over the last 10-15 days, there have been very unnatural spikes, especially on options data on the Sensex and the Nifty, resulting in huge losses for options sellers. So this is the reason why I marked this, and this is the second most important chart as far as I am concerned for today, as also till June 4th, when volatility in Nifty options, bank Nifty options, will rise dramatically. Therefore you are advised extreme caution, especially if you are an option seller. Now let's analyze what the Nifty is up to and what are the things that we need to keep in mind for today. Frankly, the trend is absolutely flat. There are no strong cues emanating from GIFT Nifty, up about 13-14 points, so absolutely flat cues coming in there. The overseas cues from Wall Street, from different asset classes such as crude oil, bond yields, are modestly positive. As you can see, we'll also be showing you the chart of Dow Jones. The Dow Jones index has risen sharply over the last 3 trading sessions, although it has not impacted Indian equities, but it is one less thing to be concerned about. So US equities are in positive mode. The other interesting thing is that the US 10-year yield is absolutely quiet at about 4.512. It is still at its lowest over the last 2-3 weeks. Nothing is happening on crude oil. That's quiet as well, below 200 ADMA. These are the two asset classes. If they are quiet or negative, they have a positive impact on global equities, including Indian ones. So crude oil is quiet, US 10-year is quiet. Wall Street has shown a thumbs up in terms of equity indices. Therefore we are expecting some kind of quiet move on the Nifty as well. No, if there is an upside, then we'll happily look at it. Again, the foreign institutional investors are net sellers, somewhere to the tune of 2100 crores in yesterday's sale, and the DIIs purchased about 800 crores of Indian equities. This risk of trade for Indian markets by foreign investors is concerning. All of April they were net sellers, and it was only domestic institutions, ultra HNIs, SIPs as well, EPFO money, that held the Nifty up. Now let's look at some other points that we need to look at. Software and IT stocks were in great shape yesterday. The Nifty IT index rose about 308 points to 33,217. Remember, this index is consolidating around its 200-day exponential moving average and perhaps is giving an opportunity for long-term investors to enter. So the best way to do that would be to buy an IT fund or the IT ETF. We'll discuss this a little later. But the fact remains that bulls have been unable to pierce 22,600 on the Nifty, and that is a cause of concern because all positivities are getting negated. So if you get a dip towards 21 EMA, which is 22,400, 22,350, that's a level to get into the index. It is still not turned into a sell, but buy the dip for the moment seems to be working. Now let's look at the earnings section. You have strong earnings coming in from Gujarat Gas. The numbers were fairly substantial, an 86% rise in fourth quarter profit to about 409 crores. Margins rose dramatically on the operating side, and profit, the sales were in line for the fourth quarter, 4,150 crores. Lupin reported a strong set of numbers, 52% rise in fourth quarter profit at 359 crores and a 12% rise in sales at about 4,961 crores. Margins on the operating level improved dramatically at about 20.1% versus 13% an year ago. So these are the earnings reactions that traders and investors will be reacting to. There are many brokerage reports that have given strong targets for Lupin in particular. We'll be dealing with that a little later. Earnings today, there is one from Dr. Reddy's. If you look at the quarterly performance of Dr. Reddy's in the last 3 months, the stock has done nothing, absolutely flat, up just 2%. And from the F&O space, there are 7 stocks, futures that will be, whose companies will be declaring earnings. Among them, Pidilite. This has been a very strong counter, 13% higher as far as the last 3 months are concerned. Voltas, we've seen a fantastic rally in Voltas last month itself. Over the last 3 months, it's appreciated 14%. SRF, IGL, United Breweries are some other earnings that Business Today will be keeping track out of. So these are the basic structures that we have in terms of today's show, and we'll be. Dharmesh Kant has now joined us. He's the head of equity research at Cholamandalam Securities. Namaste Dharmesh, a warm welcome on this wonderful Tuesday morning. How do you see sentiment on Dalal Street? Yesterday was a disappointment even for a person with absolutely low expectations such as me. How do you see sentiment being stacked up on the side of bulls or bears?
Yeah, Mr. Stalvi, good morning to all your viewers. I mean, there's a fight happening between bulls and bears, and some profit portfolio reshuffling and
I
things.
can't hear you. Perhaps you need to unmute yourself.
I am on mute.
Okay, let me just get PCR to arrange it, but why don't you continue?
Yeah. So what happened yesterday was more of a portfolio kind of rebalancing happening into the market. And what I see, the sentiments are still bullish, and today should be very critical. If we are able to have a good session in green today, then I think the last leg of this pre-election build-up should likely be there into the offing to the election. But Shailji, I am able to hear you. I don't know whether it's being live, the audio.
Dharmesh's view as far as markets are concerned. Dharmesh, my apologies, I can't hear you. So what I'll do is I'll just ask a question, you'll respond, and then we'll look at it. Let's start with the earnings of Lupin. How do you see this fantastic growth that's come in as far as margins are concerned, and of course the 52% rise in profit after tax? How is Lupin looking to you?
Say has done a much better kind of an earnings growth trajectory for the last 2 quarters. And that has been particularly a surprise to me as well, because as far as price reactions are concerned, it's still not happening to that extent. They are on a down trajectory in the US market. India is and other emerging market is where this play has been on, and Lupin is particularly concentrated more into the Asia, India and other emerging market, and its concentration to US is not that great. So that has helped the earnings overall trajectory. This decent 12-15% kind of a CAGR is likely to be there on a yearly basis for most of the pharma companies. And this present market environment, though they are price fairly, but I still see seeing this in the light of the present market context, some upside may still be there. At least downside is very limited. So I would buy Sun Pharma, Lupin, Aurobindo Pharma, Dr. Reddy's, all looks very good as a basket buy at present levels.
Okay, we'll just pay a little more attention to Lupin over the next 20 odd seconds. The PCL will draw the long-term chart for you. Japanese brokerage Nomura has come out with a buy call and a target of 1,950 rupees on Lupin. Remember, Lupin has been the top performer over the last 1 year as far as the F&O pharma space is concerned. It's appreciated about 125%. Nomura goes on to say that fourth quarter EBIT was 8% higher than estimate, and it grew. The fourth quarter for the company grew across key geographies. There was a tight leash on costs, and at the moment the counter presents a very decent upside. It closed at somewhere like 1600 levels yesterday, and Nomura has a price target of 1950 for you. Some other counters, Dharmeshji, strong moves in Britannia yesterday despite a fairly tepid fourth quarter. There is some activity on the real longer term that's happening on the FMCG space, given predictions of good monsoon. Are these good levels to broadly enter the FMCG sector? And if so, what would be your top pick?
Yeah, definitely. I mean, level-wise or valuation-wise, it looks very attractive entire FMCG space. And Britannia, the good point was the volume growth, which came as a surprise. It was a higher single-digit kind of a volume growth, though the expectation for the entire segment has been low single-digit. So our performance did pull up, and the commentary of the management that going forward things are going to pick up in a big way. And the volume trajectory as well as blended realization trajectory is likely to be more stable and firmer going forward. Did the trick for most of the FMCG companies. We saw some buying traction coming back. Even the Dow earnings was also good. So overall space looks better on the valuation count. But the caveat is, as you rightly pointed out, monsoons has to be really decent for this entire segment to pick up. And if the monsoons are decent, then they will also enjoy the benefit of the lower input prices, which so far has been to their advantage. So top picks would be, looking at the space would be ITC, HUL, and Dow.
Okay, now let me point out something very interesting. Over the last 1 year, all sorts of indices have gone up dramatically. The Nifty itself is up 23% and the Nifty 13% higher. But look at how FMCG has dramatically underperformed over the last 1 year. Hindustan Unilever, the flagship FMCG company, how should I say, the 800,000 ton ship that moves very quietly on earnings oceans, is actually down 10% over the last 1 year, and the stock has practically done nothing over the last 2-3 years. If you look at Marico, absolutely flat over the last 1 year. ITC is up just 1%. Dabur, the company announced its quarterly earnings 3 days ago, and because of those earnings, the counter is up 3% over the last 1 year or so. Britannia, we've just discussed. Colgate, Palmolive, and United Spirits, these are the two outperformers in the FMCG space. But the index and the broader sector have been very, very strong underperformers over the last 1 year. So that's FMCG for you. The other strength, Dharmeshji, has been observed in IT. Again, as I point out, the index was the top gainer yesterday's carnage, 1% higher, 33,220 odd is where the index closed, again at 200 DMA. Your views on IT and anything that catches your fancy, which might make decent returns for viewers if they buy it for a 1-2 year horizon in their portfolio?
Shall if you look at the IT stocks, earnings were not that great. Even mid and small cap companies disappointed the street with the kind of growth that was expected did not come by. I did a aggregate of around 22 companies, which includes the top tier as well as tier 2 and tier 3 companies in the IT space. So the year-on-year quarter earnings growth has been for Q4 was 9.5%. whereas most of these companies are trading at 25 to 35 kind of a PE multiple. Last 1.5 years, this hope trade has been playing out that things are likely to pick up, and every quarter the commentary remains the same. That second half would be better, or after 2 quarters things will improve, which has not happened. Concept and hope is playing out that AI-enabled projects will flow in for Indian IT companies as well, and they will be margin accretive and they will start gaining the traction back, which I don't see happening for the next 1 year. At the same time, I mean, stable kind of a environment, 5-7% kind of a PAT growth is likely to be there, which will keep the downside limited. And this hope built up will also restrict the downside in most of the IT companies. They have corrected majorly. So not much downside from here. From 2 year perspective, one is trying to hold. I think the best bet is still in the large cap space. And there, I think TCS and Infosys, these two duo, should do the opening batting for the IT companies whenever the revival happens, followed up with maybe Tata Technologies or Tata Elxsi. So these are the four companies which I am really seeing from a portfolio perspective, but time horizon should be long enough, 2 years. If something happens earlier, it's all the more good. But I don't see fast action coming in. Trading blips here and there will always be there based on the news flow surrounding the US economy. And interest rate cut, even in US, is not going to help these IT companies because the spends which are happening from the BFSI space is more on the AI-enabled space, where these companies are still to catch up. So that's the long and short of the entire IT theory.
Fair point. Markets are made of contrarian views, and for every buy there is a sell. And let's see how it pans out. But if you look at the real long-term chart of the Nifty IT index, while it shows strength, but the medium-term charts point to some kind of weakness, which probably should be at least kept on the radar, if not bought into immediately. So these are the two sectors, the IT and the FMCG sectors, where valuations are for the taking. They have harmonized over a long period of time, and at this point of time, compared with other sectors, how PSUs are moving, how private banks are moving, how stocks in the mid caps and the small caps space have surged dramatically. There is a relative value to be had. Dharmeji, earnings of Kotak, they were one of the finest on Dalal Street, yet the stock seems to be a bit subdued for all the problems that the C-suite is facing. The counter from RBI is also under some kind of regulatory grip. How do you see Kotak? Although yesterday the counter was fairly decently moving despite the overall weakness in the market. Kotak for you?
Shelly, Kotak is definitely a buy. I mean, at current levels, it's a very attractive pricing for Kotak to buy. It hardly came any cheap if you look at last 10 years or so. So this kind of a valuation multiple for Kotak was never seen before. So it's at the cheaper end of the trajectory, and the earnings were terrific. I mean, all the boxes were ticked by the Kotak as far as the earnings is concerned. And I think the RBI, whatever process flow they have checked into, is actually beneficial for Kotak because the management did accept that they are doing the technological changes which is needed to have a business in a more proper and appropriate way, where there is no scope of any glitches coming to the play which will lead to a fraud or some unseen or not likely scenario happening out. So that is where I think RBI has done a fab job. They have protected Kotak from bigger scale going forward, as has been the case of, say, the other banks. I will not take the name, but like, say, Paytm was there. So that kind of issues can be avoided largely through this. So it's a good fundamental portfolio. I give the management some time. This management take over, the change in the management has shown the earnings flow, and they will definitely come out with the process and better technologies in place to take care of the disbursements which they are doing.
Okay. The PCR will fire a long-term chart of Kotak, and over the last 1 year, you will see the stock correcting 16%. This is sad, given the blue chip qualities of Kotak's extremely strong balance sheet, and the fact that it has made tons of money for long-term shareholders. But the swing gets even worse when you compare it with the basic 13% rise of the Bank Nifty over the last 12 trading months. So a 16% fall versus a 13% rise on the main index, and I'm not even talking about how other banking peers in the private sector space and the public sector space have dramatically outperformed the Bank Nifty. So these are the three themes that are broadly running in the minds of value investors in a market that is consolidating near record highs. Private banks such as Kotak, the IT sector via an IT fund or an index ETF, and of course FMCG. FMCG running because of expectations of good monsoon, beaten down valuations in Kotak, and of course probably signs of some green shoots, if at all, coming into the IT space. We are 4 minutes away from pre-open trades. Dharmeshji, any specific stock or two stocks that catch your attention in the mid-cap, small-cap or large-cap space should be part of long-term portfolios, if you could share with our viewers?
In mid-cap space, I think we have already spoken multiple times about railway infra, power and other space. So this time the focus is more on the holiday season is on. So Ease My Trip looks very attractive at current levels. I mean, the company has been doing very well. The profit CAGR of more than 100% for the last 5 years, with ROE more than 45%. This growth momentum is likely to be there. Competition is stiff. That is likely to be there going forward as well. But the focus is more on the management and the lean kind of operating structure they maintain. Bodes well for this company. So at current levels, I think 10-15% kind of an upside going into this holiday season theme can play out for this. It's more of a trading bet rather than a long-term structural fundamental bet as of now. And the second stock which catches my fancy and attention is Canfin Homes from the NBFC space. Housing finance companies have not done that great as compared to the other NBFC. So I think some traction will be built up because affordable housing government has done for the lower segment of the affordable housing. But this time around, I think post-election there can be some freebies or tax benefits coming out for the affordable housing segment, and that can push these companies very well. So earnings were great of Canfin Homes. The only caveat last quarter was there that NPA ratios were rising, which they have improved on. So 840, 850 kind of a target can be played out on Canfin Homes.
Okay, Canfin Homes over the last 12 trading months has appreciated 15.7% and has perhaps one of the soundest balance sheets that you see in the home lending sector along with PNB Housing. So those are the thoughts that are coming in from Dharmeshji. Dharmeshji, let's also look at how sentiment is there on PSU stocks, REC and Power Finance Corporation. The government and the RBI tweaking rules on lending to sort of put guardrails against problems that may or may not arise in the form of NPAs. The stocks were sold into very sharply yesterday, although they were top performers all of last week. What is your view on these two, REC and PFC?
See, as far as REC and PFC is concerned, business-wise, the view is very strong. They have been solid performers. They have brought down the NPA ratios quite significantly. Asset quality is improved. What was a surprise was this provisioning which came into the top policy of RBI, because there is no need for that. See, provisioning is something which you tackle when there is an NPA, right? So the focus should be there should not be an NPA rather than preparing for an NPA which may arise in the future. So that was a surprise to me. The focus should be more on the process through which the disbursement of project financing is done, so that such kind of situation do not arise. At the same time, it may be a provision for one time, and when the project gets rolled out and eventually you will reverse it and the profitability come back. But for existing and ongoing projects or the upcoming projects, you have to make this 5% kind of a provisioning. It will make a dent into their net worth or tier 1 capital, which will restrict their lending ability. So when we are talking about our growth picking up GDP, so this should not have been there.
Right. Dharmesh, I'll request your indulgence. The pre-open rates are upon us. Let me just spend a couple of minutes on them. 115 points higher, ladies and gentlemen, a great start against all expectations, and this is what markets are all about. 22,530, 540 for you as far as the index is concerned. Let's immediately dip into what the index heavyweights are telling us as far as today's potential move is concerned. We look at Reliance, 28 rupees lower, 28.10. This is not looking good at all. Infosys, 10 rupees higher, 1436. Remember, Infosys was amongst the few gainers yesterday on the Nifty, and the stock is still below 200 DMA in a roaring bull market. Okay, HDFC Bank, 19 rupees higher, 1540. Now this is very, very interesting given the fact that even HDFC Bank is below its 200-day moving average. These two show signs of hope. The Nifty now flattening out, as I had mentioned earlier, now just 43 points higher, 22,485. What are the other gainers? L&T is 14 rupees higher, 34.78. You have a green tick on Bajaj Finance, 59 rupees higher, 6,990. We'll take a quick detour into the F&O space and see what is ticking as far as prices are concerned. Okay, earnings boy, Gujarat Gas, very strong set of numbers. Profit up 86% at 409 crores. The counter is 3.8% higher, 569 now. BPCL and HPCL 3% higher and 2.7% higher respectively. HPCL earlier informed the exchanges that its board will meet on May 9th to discuss a bonus issue, and just a couple of minutes ago BPCL has also informed the exchanges that it will do likewise. The date is still not known, but a lot of enthusiastic punting happening. Remember, with crude oil below 200-day moving average, OMCs reflect that strength. Okay, Hindalco unit Novelis has come up with a strong set of earnings. The counter is 1.7% higher at 650, and a host of brokerages have also upgraded Hindalco given strong price targets. A very quick look at NSE 500. Okay, SW Solar 4.7% higher, 749. What else is moving? CSB Bank maybe 2.3% higher, 359.45. Marico 2% higher, 541.50. Let's look at FMCG stocks. What are they doing? And then I'll head back to Dharmesh ji. The BSE FMCG index. Okay, United Breweries 4.3% higher, 2089. Gillette 4% higher, 68.99. Manorama Industries 3.9% higher, 645. So on and so forth. Okay, Nifty flat as flat can be, 50 points higher, 22,492. Dharmesh ji, fairly decent opening, quite tepid, would you say?
Yeah, definitely. I mean, the opening looks decent. And let's see how the day progresses. If today is a green day, then I think the last leg of pre-election rally should commence today. And let's not forget, Shailji, that we have already done 20% kind of a index rally. So in light of that, some profit taking will always be there. But today's opening looks very constructive.
Okay, I'll also mark Lupin. Remember, strong numbers. The counter is 1.2% higher at 1700. This is the earnings reaction, and Dr. Reddy's flat as flat can be. This is the only Nifty company that is report earnings today, up 0.7%, 6,338 over the last 3 months. This particular stock has not done anything spectacular. I also want to see what Pidilite is doing. This will take me a little time because I'll have to scroll through alphabetically to find out what Pidilite is doing. It's the earnings boy today. I can't see it on screen. Flat as flat can be. Okay. How about SRF? Let's look at SRF. They are also going to announce earnings today. SRF is we'll get those numbers for you. My apologies, I couldn't get them on. We are also waiting for Osho Krishnan to join us. He looks after technicals and derivatives research at Angel One. Good morning to you, Osho. The first and most important component, a question. What do you think of India VIX and what is it up to?
Very good morning, Shail. Firstly, thank you for having me at your show. Well, now coming to India VIX, yes, India VIX in the last week have surged almost 30%, and in the last trading session, it has even surged approximately 13.5%. So this indicates that our market is going to have some kind of a strong volatility in the near future, because if you will be looking at the recent trend in the key indices are not facing any strong movement either on the buying side or on the selling side. So that means the range is getting narrower down, and in the coming future we can expect an outburst in any of the direction. Looking at the volatility index, I'm expecting that uncertainty is likely to rise in our market. So one should be very much cautious in markets, because one should not have take heavy positions in these kind of circumstances where the India VIX is roaring strongly from the lower zone towards 16.5 odd levels. So I'm expecting that in the coming time, in let's say in the next 2 or 3 trading sessions, there can be a strong movement that can be expected, that can be seen in the key indices. So one should be very light on their positions and not have an aggressive view on either of the sides.
Yeah, of course, a lot of traders are also in touch with me, Osho, and some of them sadly have posted, especially option sellers, have posted very strong and very heavy losses because of the 3 spikes that happened in the last 10 trading sessions, especially on the Sensex and the Nifty. I hope nobody around you was hurt.
See, basically, matlab, we people generally, our clients don't have that much of leverage for having a strong selling positions. Majorly, counters or the retail investors, they do on the buying front. So there are many of the things that has happened in the last 2 to 3 trading sessions, as the market has given a very sharp twist and turns. It's not very surprising. The market has surprised with their moves. It was not very complacent move that was seen in the last 2 trading sessions. Because if I'll be talking about the trend was definitely bullish. But in the in the last 2 or 3 sessions, there has been a strong whipsaws movement, or there has been hostiles that can be seen from the bulls in our market. So there are positions that are stuck in the last 2 trading sessions, but we are expecting that in the current phase, better to or better to exit from the current levels and look for opportunities in the coming 1 to 2 trading sessions with lighter positions, not on a heavy or leverage positions.
Okay, fair point. Osho, your top picks for today?
See, basically, there are very limited counters which are looking bullish, but I am still having a bullish view in the market. So, 2 counters which are looking positive to me. One is Jubilant Food. Jubilant Food is looking very positive in the last 2 or 3 trading sessions. It has seen a very strong recoup from the lower levels, and I am expecting that in the coming period, it can test the zone of 495 to 500. So, first technical pick is Jubilant Food with a stop loss of 455. The second technical pick is Zydus Life Science. In the last trading session, we have seen a strong traction in Zydus Life Science, and it has surged almost towards the 52 weeks high for itself. So I'm expecting that in the coming period, or even in today, we can see a very strong follow-up buying in Zydus Life. So I'm expecting a target of nearly 1060 to 1070 for Zydus Life, and 990 should be kept as the stop loss.
Fair point. So Zydus and Jubilant Food are the 2 things that we looking forward from your end. Dharmesh, getting you back into the conversation, we discussed about everything under the sun, except for any earnings that, according to you, may have sort of outperformed even the most bullish sentiment as far as fourth quarter earnings are concerned. Any names that you can share, if at all?
I think sadly the only earnings which strikes the chord as far as our performance is concerned is of Kotak Bank. So that earnings was actually a surprise, and it was after so many quarters of lull, it came through and came through very strongly. So that was one good set of earnings from the BFSI space, which we are looking forward to. And I am looking particularly forward to the earnings of SBI. So let's see how it pans out. If these two are in place, because Axis, ICICI, and IndusInd performed in accordance with the line. So that space is doing well. Other than that, if you look at the broader segment, it has been more of a disappointment rather than a pleasant surprise, because the type of price appreciation which has happened on the backdrop of the expected earnings growth has not played out. So there's a concern on the broader market.
Fair point. Let me just get Osho into the conversation as far as Kotak is concerned. Kotak yesterday was an outperformer. In the broader weakness, the Kotak stock rose to about 1628. Let's see what Kotak is doing today. 4 rupees higher, 1628.7. Osho, what are Kotak's medium-term charts telling you? Since 2020, the stock has done nothing in terms of adding any kind of gains.
See, overall, Kotak was having a very strong weekly support around the zone of 1650, but in the last third session, it has given a very strong breakdown and has plunged below the zone of 1650. So I'm expecting now that should be seen as the immediate resistance for Kotak Bank. No doubt, after the result, there has been some strong recoup that can be seen, but still there is a very strong way for Kotak to reach back towards its normal levels of 1800, because it has been hovering around the zone of 1800 from a longer period. So 1800 still is a very strong or daunting task for Kotak Bank for the time being. But for now, I am expecting that 1660 or 1680 should be somewhere where one can see Kotak Bank to bounce back, and there can some kind of consolidation. After that, there has been a very strong bearish gap on the higher end from the zone of approximately 1700 towards the zone of 1800. So 100 points of bearish gap is there with Kotak Bank. So until it fulfills the gap, we are not very much optimistic or bullish in this counter. But for shorter duration, yes, there is 30-40 odd points of movement that can be seen from here onwards. And on the lower end, I am expecting 1590 to 1600 should be acting as the support zone for short-term traders.
Fair point. This is a view that has been on the conservative side, and rightly so. If a stock is not doing anything over the last 4 years, one needs to be cautious. People generally presume that the stock will start moving up from the day they start purchasing, but the markets have a very different outlook to such robust expectations. Let's also look at some other interesting threads that are moving. I like to see the PSU basket. Remember, it was just beaten black and blue yesterday. Bama Lorry is trying to open 4.5% higher to 83. HPCL, yes, 2.7% higher, 527.85. Gujarat Gas, the earnings boy, 2.7% higher, 563. BPCL, Union Bank, Indian Bank, all in the green. Dharmeshji, very quickly, SBI to report tomorrow. The stock has already shot up dramatically. Your very quick view on this one.
Of course, if earnings are reported and there is some profit taking happening into the play, it's a good buying opportunity for SBI. So I was looking forward to first the numbers, how the advances growth and the NIM is there. So if those are in line, then definitely it's a buy on any profit taking opportunity coming to play. However, if the stock does not correct and it rallies further, I would avoid for fresh buy. We'll stick with the position which is already there.
Okay. Osho, to you, SBI has been a standout performer in May so far. What are the charts telling you?
See, overall, as you have mentioned, the counter have already seen a very strong upside movement. But looking at the recent period, the stock is expected to see some kind of consolidation or some kind of profit booking in the near period, because the technical developments have already been sold towards the overbought territory. So I'm expecting that the zone of nearly 800 should be acting as the first support zone. But the time it breaches below the zone of 800, then there can be another 20 to 15 odd points of correction that can be seen. So 780 is a very strong support for this counter. Once it reaches down to 780, then from there onwards we can see a very or a decent buying traction in this counter. But again, the results are pending, so there can be some kind of volatility that can be seen in this counter.
Okay, ladies and gentlemen, the markets are now open. I'll request some indulgence from you, Dharmeshji and Osho. Let me just dwell upon how prices have moved. A green shade, a light green shade on Dalal Street. The Nifty is 29 points higher, 24,473. Green on the Nifty Bank, 80 points higher. IT index has opened in the green, second day in a row, 50 points higher. And the Nifty 500 is also in the green. Now let's look at index heavyweights. I want to see what Reliance is doing. Remember, it had shut shop fairly weakly as far as pre-open is concerned. Still down 9 rupees at 28.29. Okay. How about TCS? 17 rupees higher, 39.39. Remember, we are tracking IT as a long-term punt at current levels because of decent valuations. Then Infosys is up 1%, 14.25. How about HDFC Bank? A rupee lower, doing nothing, 15.21. How about Kotak? 40 paisa higher, 16.25. Let's now shift focus immediately to the FNO space and look at outperformers. I want to see. Okay, now this is really interesting. Marico, 7.5% higher, 571. Remember, we've discussed FMCG in great detail. This is a sector that probably you should be adding because of the expectations of a good monsoon. Please also consult your individual and independent financial advisor. Titagarh, there is a research report coming in from Morgan Stanley. The counter is 5.8% higher, 1093. HPCL, this is the bonus boy, 3.5% higher, 531. Godrej Consumer Products, strong set of earnings, 5% higher, 1311. How about BPCL, 2.34% higher, 624. Okay. How about FNO? Let's look at FNO stocks. So these are all earnings led and it's dominated by FMCG. This will be an interesting point to look at. What is the FMCG index doing at now? Okay, without a doubt, the top gainer, 1.3% higher, 55,411. The broader sentiment is okay on Dalal Street, almost even Stevens as it comes to the advanced decline ratio, 966 stocks in the green, 836 in the red. Okay, lever is taking it away, 2291. My first question to you, Osho, what would you do? Is this a point of purchase?
See, for Hind Unilever, yes, the counter has seen a strong plunge in the recent period, but looking at the recent development from the last two trading sessions, the counter have started gaining some buying traction. So for longer term perspective, yes, one should definitely look for this counter on a staggered manner for a investment perspective. But for a shorter duration, I am expecting that time it breaches the zone of approximately 2300 on a sustainable levels. Then from there onwards, we can see a very strong recoup in this counter towards the zone of 2420, 2450 in the short run. So it has given a very decent fall in the recent period, and one should utilize the dips to accumulate this counter for short to medium and even for longer term durations.
Okay, ladies and gentlemen, let's look at the most obvious thing staring in our face. Within FNO, the top 4 out of 5 gainers are FMCG stocks. Marico, blowout, 8% higher, accompanied by a 3% rise in open interest, 575 for you. Godrej Consumer, 5.4% higher. There is short covering happening on this one because open interest has fallen. Dabur, again, the traction after strong earnings continues, 548, 2.9% higher. And of course, Colgate Palmolive, 2% higher, 2907. Colgate is already at a record high. Apart from that, HPCL is 1.8% higher. Earnings disappointment coming in on Lupin. Now this is 4% lower, 1613. Well, this could be a case of profit booking. Ahead of earnings, SRF has moved 90 rupees lower at about 2510. Dharmeshji, anything that catches your attention? It's FMCG all the way. Nestle now 1% higher at 2500. What would you do? Anything in FMCG? I'm glad you were here today. We discussed FMCG in great detail before markets opened.
I think the two top picks, just from a trading perspective and sensing that the way the market is behaving, and from the defensive side, as you rightly pointed out, FSCG has, on a relative basis, underperformed the market by 30% on the index level. Put together Nifty outperformance and the FMCG index underperformance. So HUL and Dower, these are the two picks which I am comfortable with getting at current levels. And ITC from a long-term perspective. So from trading perspective, HUL and Dower is a right pick. And if you want to hold it for say 1 year or so, then ITC, I see it crossing 500 kind of a level. So these are the three topics from that space.
Okay, these are things that are coming in front of the markets. Profit booking happening in Indus Star, down about 2.76%. Colgate taking it away, 2.74% higher. And again, the FMCG sector here. The chart is very bullish on Colgate. How about you, Osho? Any views that you would have on Colgate?
See, for Colgate, yes, the counter is looking very positive. It has been hovering in the higher highs, higher lows pattern, only taking support from the 21-day EMA on the daily time frame. So I'm expecting in the last 4 to 5 trading sessions, there has been some kind of consolidation in this counter. And today we are witnessing the consolidation breakout. So I'm expecting that on the higher end, immediate target comes around 2960 to 2980. But overall trend is very much positive. So I'm expecting that even on the lower end, if there is any kind of dip towards the zone of 2880, 2870 odd levels, that should be auguring very well for the buyers. And on the higher end, 2980 should be the first target that one should see for a very short term basis. Overall trend is very bullish, and the counter is just hovering above all its exponential moving average and outperforming from the FMCG space.
Fair point. It's just FMCG. ITC now perking up 1% higher, 441. Godrej Consumer Products 7.5% higher. Osho, you will have to come in on this one. Now, this is a blowout that's happening. Let's look at Godrej Consumer Product. There is a strong set of earnings that has come in, although you have a write down that has happened, but strong set of earnings. 1320, 1330 in cash. What would you do?
See, from here onwards, I am expecting the breakout to sustain in this counter, because it was having a very stiff resistance around the zone of 1270, 1280 odd levels. And today it has given a very drastic breakout, approximately 6% up. So I am expecting that from here onwards, there can be a strong upside movement that can be seen in Godrej CP. And for immediate basis, I am not very much aggressive in the targets as of now, because it has already moved 6%. But I am expecting that now 1300 zone should be acting as a very strong support zone, and from here onwards another 120 points of movement can be seen. So 1420 should be the target for short term perspective. On daily basis or on intraday, I am expecting 1340, 1350 kind of a target.
Fair. Because ITC has been quiet for a very long time, it's now showing signs of life. Lever and ITC together, that's a very potent combination, ladies and gentlemen. One moving on expectations of a good monsoon. Yes, ITC. I think Osho, coming to you first, because there is a breakout due from 200 DMA. Your views on ITC, and then we'll touch upon Dharmeshji's thoughts on the cigarette maker as well. Osho, you go first.
See, overall, ITC is witnessing a kind of a consolidation near the 200-day SMA, as you have pointed out. In the last 6 to 7 trading session, it has been consolidating near the zone of 440. So it will be very crucial to see that whether it will be having a follow-up buying day or not. Because if there will be another day which will be closing above 440, 445 levels, then from here onwards, one can see the cycle of higher highs to continue in this counter. Else there can be some kind of more consolidation that can be seen. But looking at the overall traction in the FMCG space, I am expecting that it should start moving from here onwards. And on the higher end, I am expecting 450, 52 should be seen in as the immediate target. So aggressive traders can even gauge for this momentum at current levels. The conservative traders should wait for another day for having a follow-up buying interest.
Okay, ladies and gentlemen, this is let's now just discuss the FMCG sector in some detail. Needless to add, it's the top performing stock top performing index as far as the 19 markers that we track for you. 1.85% higher, 55,675. 12 out of 15 stocks that make up the Nifty FMCG index are in the green. Let me just look at how the chart for the index is positioned. Okay, now this is at the highest level since 25th of Jan 24. So we are now in May, so that makes it a 4-month high. Dharmeshji, coming to you. Your top pick within the FMCG sector, and how do you see this turn of events?
Actually, a topic we discussed immediately, I mean, way back. So it's HUL, Dabur and ITC. But I have a point on FFCG space. So because what happens during a very heated summer season, consumptions drop. People don't go out much, people don't consume much, there's a water problem, you don't want to apply various face creams and all things like that because of perspiration. So this Q1 of FY25 is likely to be a spot for FMCG. It's just that markets have turned volatile and people are looking a place of safety. And that is where this trade has been moving. It's more of a trade to be right now. And that's the reason why I picked up these three stocks, so that fundamentally, reasonably, they are likely to do well. And ITC remains a topic for the very fact that 80% of their operating profit is still to the cigarette division, where the volume growth has been there. At the same time, government has not tinkered with the excise duty for the last 2-3 years. So there's a stability kind of environment out there. As long as that remains, it's still cheaper compared to, say, Hindustan Unilever. So and that's 500, 510 can be the likely target. So single pick is ITC, but if you want to play this trade out, maybe Dabur and HUL looks better. Having said that, I don't see Q1 number coming better for these companies.
Fair point. And remember, Dabur and HUL, for those who have a real long-term memory of the market, have been fabulous wealth creators in portfolios that have seen about 4 or 5 decades. It's only now, given that valuations were always pricey in the FMCG space over the last 3-4 years. Nestle was trading at a PE of 70. Lever, the stock doing nothing for 4 years, was at a PE of 50-55. So all those pain points have got harmonized with the fact that while sales and profit and balance sheets have improved for FMCG players, the price hasn't done anything. So it's now that the door seems to be unlocking for gains. Lever now 2.7% higher, 23.28. Let me just see Lever's chart. I personally haven't seen Lever for quite a while. The last thing I remember was that there was a royalty issue. Okay, now this get any better? The most recent high has been 26.67 on January 1st, and the counter is showing a swing trade. Osho, what are the technical charts telling you on Lever? Below 100 DMA, below 200 DMA, it can't get better for a swing trader. Let me just hunt and call on this one, but meanwhile your views.
Yes, definitely, because we are witnessing a kind of a resurgence in this counter at a very lower level. So, as you have mentioned, that it is hovering below all its major exponential moving average, just above the 21-day exponential moving average. But from here onwards, as I have mentioned before, also that one should try to accumulate this counter in a staggered manner, because there has been a very steep dip in HUL from the zone of 2650 towards the zone of 2200 odd level. So, this gives an opportunity to start investing or start accumulating this counter for a medium to longer term duration. For short term duration also, with the kind of reversal that we are witnessing, I am expecting that it will sustain above the 2300 mark, and from here onwards one can see a decent upsurge towards 2370, 2360 odd levels on a very immediate basis, which is the 100-day exponential moving average. So that should be seen as the first resistance or first target for those who are entering into this counter at current levels. Overall, the counter is looking very positive with the kind of reversal pattern that it is making, but one should definitely wait for the confirmation that whether it will sustain above 2300 levels or not. If yes, then from here onwards we can see a decent upward rally, a gradual up movement that can be seen, because HUL don't show basic in general a very drastic upsurge or downsurge in this counter. So there can be a gradual up movement that can be seen in HUL. 2360 should be the first target, followed by 2420.
Okay, what we'll do, ladies and gentlemen, we'll show you the 2320 Hindustan Unilever call expiring on May 30th. Now that call has already moved very, very sharply. It'll just come on the screen in a matter of seconds. It's at 45.20 rupees. It's already shot up by about 29 rupees. So there is no point getting into it at current levels. But the fact that we are on May 7th and this call will expire on May 30th gives you an ample opportunity to get in at lower levels. Let's see whether we can get this call. Yes, there it is. It's like I said, already up 162%. So keep this call in mind, and let's see how it moves from here. But any dips on lever now present an opportunity for even long-term investors to get back into the counter, seeing this strength. Let me just also see one more interesting point within the FMCG space. This is the volume buzzers. This will tell you how much of interest is there. You'll be surprised in FNO stocks. The top traded and gainer is Marico, 578 for you, 9% higher, ladies and gentlemen. Already 4.6 times the 5-day average has been traded of 73 lakhs. Godrej Consumer is again 6% higher, 1328. About 1.7 times 5-day average has taken place. Let's look at what lever is telling us. 3% higher. Already 35% of 5-day average has been traded, and this is just 9:32. The first 15 minutes of trade have lapsed. So this is what we've discussed on FMCG. Very, very strong tailwind coming in from modest earnings shown by Dabur, the likes of Marico, and of course Britannia over the last 1 week. But given the fact that valuations had harmonized and the hope that monsoons will be good, we've seen a strong move coming in. Today's kicker was Godrej Consumer Products, and of course the sustained buying that we are seeing now in Marico. Let's look at all-time highs in the FNO sector. They are Colgate Palmolive and Godrej Consumer Products. Let's look at it in the NSE 500. Okay, you have CDSL 3.4% higher, 2222. Brigade Enterprises, Godrej Properties, and of course CG Power. Coming to you, Dharmeshji, would you be still bullish on CDSL now at record high? And of course, okay, let's get Osho in the conversation. Osho, from your this wealth management and the entire broking fraternity, what does the CDSL's medium-term chart tell you?
See, overall CDSL is still looking very positive, because if you will be looking at the overall news of having a demat accounts, opening of demat accounts in the last quarter, or the kind of equity markets are performing, so that is obviously attracting the new participants in this counter. But technically also this counter is looking very positive. It is having a very strong surge from the zone of nearly 1700, and it is hovering above 2200 now. So I'm expecting that there can be ample amount of opportunity left in this counter. On the lower end, approximately 2050 should be seen as the support zone, and on the higher end I'm expecting a target of nearly 2300. But before that, there can be some kind of profit booking that can take place, because overall the technical developments have surged towards the zone of overbought territory. So one should not be very much complacent, but the trend is very much bullish. So for short to medium term investment perspective, this counter is very positive, and one should definitely try to add this in their portfolios. For short term traders, one should wait for some kind of dip towards the zone of 2180, 2150 for the short term, and then one can again start looking for opportunity in this counter.
Fair point. There is a breakout on the 15-minute chart of CDSL, but if the stock is at a record high, it's fairly obvious that the daily chart has moved also substantially. The counter was on 28th of March trading at 1714 rupees, and from then on it's been almost a one-sided move that has come in. What else needs to be discussed? Any favorites between HPCL and BPCL Osho on your side?
See, before that, I want to highlight one of the counter which is looking very positive to me is CG Power. CG Power has given a breakout on the technical front. I was expecting that at the time it surges above the zone of 555, 552. Then from there onwards, there can be a strong surge that can be seen, and it is hovering near. I guess it's at its lifetime high. So I'm expecting that this should continue in this counter, and I'm expecting a target of nearly 600 for CG Power for short-term duration. Even in the overall day, if the counter comes again towards the zone of 555, that gives a very good opportunity for investor or even for short-term traders to accumulate this counter for a higher targets of nearly 590 to 600 odd levels in a short-term period. So this counter was in my radar and it has given a very strong breakout. So one should definitely keep a track on CG Power. Now coming to Hind Petro or BPCL, then both the counters have seen a kind of a consolidation breakout, but Hind Petro again comparatively, because it had surged above the zone of 500 and it's sustaining the zone of 500 on a very decisive manner. So I can expect that there can be some kind of consolidation, further consolidation in this counter, but the sustenance above 500 is a very positive development for Hind Petro. So I expect that from here onwards, there can be a decent, a gradual up move that can be seen on the higher end. 560, 565 is the first target, and on the lower end, 500 should be seen as a very strong support zone.
Okay. Now, let me just mark the most traded counters on the NSE 500. There are some unusual names. Starts with Marico. I can't remember the last time that happened. We are now at 937. Almost 460 crores worth of transactions have happened on Marico. The counter's up 9%. It's the top performer in the FNO space. It's the top performer on the Nifty FMCG index. RECL. Now this is interesting. The reason why I point this out is that yesterday's pain point was Power Finance Corporation and REC. Very heavy selling pressure, or let's just say profit booking coming in, because both stocks were at record highs. Osho, have the charts stabilized, or is it just too early to comment?
See, again, overall the counter was at a very overbought position, so there was some kind of cool off or profit booking that was expected, but last day whatever has happened was totally unexpected and has surprised the market. But overall, the positive thing that it has made, that such kind of correction should be seen as a very healthy one in the bullish rally, and REC Limited or PFC, both counters are in a very strong bullish rally. So such kind of correction should be treated in a very positive manner. For the time being, there can be some kind of consolidation that can be seen near the zone of 500 to 520 odd levels. But again, the time we start witnessing a strong traction in this counter, then we have a potential upside of nearly 560 followed by 580. But one should wait for some further consolidation or for some further time-wise correction phase in REC and PFC. If that sustains for nearly 1 week or 2 weeks, then again it will be providing ample opportunity to invest in these two counters.
Okay, we'll again get back to our option play. Remember, we are tracking 2320 Hindustan Unilever call for you. I had marked it when it was at 42 rupees. Now, ladies and gentlemen, it's at 54 rupees. Very, very strong moves coming into lever. This is something that needs to be looked into with great detail and attention. There is very, very heavy short covering that's happening in the ITM calls of Hindustan Unilever's option chain, which essentially means that all the bears that had taken short positions on the counter in the option space are now covering their positions, and therefore that's adding that little extra in terms of how the move is coming in. Now there is call unwinding that's happening at 2400 price on the Nifty call, on the Hindustan Unilever call. About 1 lakh 2,300 calls have been vacated. Let's see what's the size of Lever's contract. It is 300. So this is something that needs to be looked at, and at the same time now also look at ITC's options. If Lever is moving, ITC cannot be far away, and remember ITC is at 200 DMA. We are at 444. Let's look at the 445 call of ITC expiring May 9th, 9 rupees. It, ladies and gentlemen, has already appreciated by 50 rupees. By the time, yeah, the PCR is also showing it. Osho, your view on ITC's 445 May call?
See again, ITC, as I have mentioned that for aggressive traders, yes, this provides an opportunity to start accumulating this counter. On the options front, I will be waiting for some kind of dip because the first half an hour or the first 15-20 minutes have already seen a very drastic up move in the FMCG space. So all the options premium have already been on a very elevated levels. So there can be some kind of correction. The trend is very much bullish, but the levels of 9 rupees 30 paisa, 9 rupees 50 paisa approximately is a bit higher for 445, which is just near about ATM option. So I will be expecting that once it cools down towards the zone of 7 rupees, the counter remains at the same levels, then one should definitely try to gauge on this momentum for a higher target of nearly 11 to 12 kind of a premium. So for the time being, one should definitely can look for this opportunity, but they should keep this 445 call option in their radar. And once there is any dip towards the zone of 7.5, looking at the underlying stays around 443, 444, then one should definitely try to add, or one should definitely try to gauge the momentum with the options premium.
Okay, this, ladies and gentlemen, is a new trend that's coming in on the Nifty FMCG index. It's now at its highest level since January of 2024, so nearly a 5-month high, and it's sustaining within Lever, within Marico, Dabur. Whole host of FMCG counters are in the green, and as Osho very rightly points out, options premia are elevated because of a lot of buying interest. Keep patience, but keep an eye out on 2330. 2330 I think is the one we discussed on Hindustan Unilever. No, we discussed, let me just get that back again for you.
2320.
We had discussed, yes, 2320 call on Lever. Now it's in the money, so that's also really good. So keep that an eye out, and of course 445 on ITC, both elevated but both showing very strong signs. Okay, ladies and gentlemen, one of the most disappointing stocks, Asian Paints, is also showing an uptick, now 1% higher, 2961. ओशो, आज सारी दिन हम लोग यही सब डिस्कस करेंगे, FMCG counters. What do you think Asian Paints is telling you? 17 rupees higher. The PCR will fire 2960 call for you. This is quiet. Let's do Asian Paints.
The Asian Paint is in my radar from the last week. The time it has given the breakout on 2nd of May, that time I have kept this counter in my watch list, because there are two developments that has been seen. One, it has fulfilled the bearish gap on the higher end, and after there has been some kind of consolidation or profit booking that has attracted this counter. But again, in the last two trading sessions, the 50-day exponential moving average has provided a very strong support for Asian Paint. So I expect that on the lower end, 2900 is the zone where it is having a very strong support zone. On the higher end, the 100-day exponential moving average, which is at 2970 kind of a level, is a resistance. The time it breaches and sustains above 2970, then I think that it should test the zone of 3050, 3080 in the very short term period. So one should definitely keep this counter in their watch list. If there is any sustenance above 2970 odd levels, we can see a strong buying tractions in Asian Paint for almost 70 to 80 odd points on the higher end. So 3050 should be the first target for short term traders.
Fair point. We'll show the 2960 Asian Paints call for you, although it's already moved very sharply. But again, there is a swing trade in the making for Asian Paints also, and I'll give you a very simple reason for that. I think the most recent high on Asian Paints is 3300. This was we had seen in December of 2023. The all-time high is 3563, which you saw on 25th of July, and it is now that the stock is below most long-term moving averages. Let me just see a 3-month chart. Yes, I have a 3-month chart with me. Okay. So this is very, very interesting. Since July of 21, ladies and gentlemen, when the stock hit 3,507, and we are now in May of 2024. For 3 years, the stock has done pretty much nothing for its shareholders. So this is, like I said, the kind of time correction that has happened in many of these very large, very well-known brands. They have fabulous balance sheets, nearly debt-free, very strong return on equity, return on capital employed. It's just that they haven't fallen as much. They are now taking support on long-term moving averages, and given the fact that there has been a price and time correction and that monsoons are likely to be good, there is new interest coming in the entire sector. You look at cash stocks, how they are moving. Nifty doing nothing at all, 22,471, 27 points higher. Osho, anything that catches your interest?
See, for the timing, there are there is FMCG space only which is gaining a strong traction for the timing. Some of the power space is also having some positive momentum that can be seen, but mostly the trend, if we will be looking in the market, then that can be definitely been seen with the kind of a movement that we are witnessing on Nifty. So Nifty is having a very lackluster day, but FMCG have obviously overshadowed the Nifty over in the last half an hour. So I'm expecting that the market is on a very subdued note. There is very strong, or we have to be very much selective in selection of stocks or in selection of themes that are moving for the time being. Yesterday, there has been some kind of cushion that was provided from the IT space. Today, FMCG have performed a very strong in a very strong manner. So I'm expecting these should continue, but overall, the market are still. One should not be very much or one should not forget the India VIX also, because India VIX is already very high. So there is some kind of movement that are having in the market, but definitely one needs to be have maintaining their exclusivity with the stock selection. So for now, FMCG space is looking positive. Some of the selective counters like Voltas, Havels, these are also performing well. And some of the power space, like I have already mentioned, CG Power is looking positive. So there are some of the stock picks that you have to do from the different themes which are doing well, and accordingly one needs to have their trading strategies for the day.
Fair point. 9:48 now, ladies and gentlemen. There's just no stopping lever. The counter is now 3.7% higher at 2351 in the FNO space. Let me just show you some data on the okay, just a moment please. Okay, lever as far as FMCG is concerned, okay, is showing an uptick of 4.3% in open interest at 2347, and you'll be surprised to know that within the FMCG, within the entire FNO space, lever is the top traded stock future today, even more than Bank Nifty. So you can see the kind of interest that is coming into the FMCG giant from the very beginning of the show today. Osho, thank you so much for your lovely time. It was very interesting listening to your thoughts, especially on stocks such as lever, CDSL, and of course the 2 points that you had mentioned. We'll be looking forward to your continued patronage, and thank you so much for your time. Have a nice trading day. I hope you don't face some option spikes on the wrong side.
Yes, hope so. Thank you so much for having me at your show. Thank you.
That, ladies and gentlemen, brings us to the close of market today on this lovely Tuesday morning. The Nifty and the Bank Nifty are doing practically nothing. Bank Nifty is still down 135 at about 48,730. But the star of the day is the FMCG sector. Remain glued to business today for all your financial news needs. That will be all from my side and from the PCR.